Hi everyone and welcome to today's morning report on Tuesday the 9th of February with me, Japan market analyst at Hantech Markets. European trading sessions got off to a mixed start really, and this has come on after some significant declines that we saw yesterday. Real flood out of riskier assets towards safe haven trades. There's no real driver behind it. I mean, you had those Chinese FX reserves declining by over $100 billion for January. That announcement yesterday, but then it seems as though that the banking sector is beginning to get hit quite hard. Huge losses on European banks yesterday. Bit of a rebound today, and that's along with a bit of a rebound in oil. I think that's helped to stabilise sentiment to a certain extent, but exactly how sustainable this move is at the moment remains to be seen, because you really have a flood into safe havens. As I said, you've got the Treasury yields sharply lower. You got US Treasury 10-year back to its lowest level since Q1 2015. So basically a whole 12-month low there on the 10-year. You got the 2-year sharply low as well. That's back to levels not seen since October. The dollar has sort of remained a bit under pressure. I mean, the big story has been the yen, the massive sell-off in the yen. I'll talk about that in my chart appraisal in a minute, but certainly the yen is strengthening hugely, and dollar yen sharply lower. That is a real signal for the markets, in my opinion. But interestingly, that the oil price has dropped off, yes, but it hasn't yet broken that 29.25 level that has been so important as the basis of support in the near term. However, we do still have pressure to the downside, and despite this little intraday rally, how sustainable is it is the question. I think we need to see some sort of real sign of growth picking up, or a positive economic sign. Otherwise, I think the markets are going to continue to sort of drift off, being sold into any sort of rallies, and I think that negative sentiment remains in place. So, what have we got to look forward to today? Well, we've still got a little bit of data to look forward to until we get Janet Yellen's testimony tomorrow. We've got the UK trade balance at 9:30. That's expected to come in at, if I can get the chart, minus 10.4. So a very slight improvement there, but nothing really all that significant. And the the US JOLTS jobs openings, and that's at 3 o'clock, expected to come in at 5.4, so very slightly lower, but remaining at strong levels. So that takes me to my charts today. Now, we had the DAX, which fell over last week. I'll just show you the DAX actually. First of all, massive sell-off yesterday. Broke down through that huge floor. Big bearish signal that was. Now we've got the FTSE, which is also breaking lower, but it broke through that 57.68 level yesterday. Hasn't quite broken through that January low, 56.40. Now 56.40 dates all the way back to 2012. And it looks as though the FTSE is going to be coming back to test 5600, doesn't it? That reaction low that we had sort of November in 2012. And if 5600 goes, to be honest, I think we're going all the way back to that massive 2012 low, 52.30. But it certainly looks like this is a continued retracement of that big bull run from Q3 2011. But it certainly doesn't look great, does it? And at the moment, what we are seeing is a slight rebound today, but that old support 57.68, that becomes your new level of resistance, and that is the level that we need to be looking out for initially, because you've got such negative momentum. I think this breakdown is a true breakdown. I think we're going to get a test of 56.40, and I think rallies are a chance to sell. There's a big overhead resistance now, 57.68 being that old floor. And look at these momentum indicators. MACD lines crossing over again. Stochastics falling sharply. RSI at 40, so there's not even oversold on the RSI. So there is further downside potential, I think, in this move. And I think what you need to look out for is any sort of rebound as a chance to sell. Now you've got here the hourly chart. As I said, 57.68 is the old floor. That becomes your new level of resistance. So we've got this near-term little bounce. but I think it's just unwinding these oversold momentum indicators, isn't it? The oversold RSI and the hourly, and the MACD lines and the stochastics as well. I think if you get the RSI back towards maybe 50 area, but probably even 40 would be adequate, but up towards 50 would be unwinding that move, and that would probably be around about where you'd see the FTSE back at 57.68 again. So it sort of would tie into that sort of argument, I think. So if you did see that drift higher today, we're up 40 ticks today on the FTSE. Again, I don't really see it as being a sustainable move. So 57.68, which is around about sort of 50 ticks higher, 40 ticks higher from where we are at the moment. But I would say that would be a great chance to sell if you saw it. So I wish you good luck in your trading today. To be honest, just sort of looking at the levels that you'd need to break out on the upside. Well, again, you've got that old level at 59.33. That old neckline again coming back in. That was the neckline that saw a breakout, but again it came into act as resistance. So that is your initial resistance on the upside if you get a break above 57.68. But to be honest, you need to see a move above 61.15, that reaction high, to get a serious change around in sentiment. And at the moment, I just do not see that happening. So good luck in your trading, and I'll speak to you later.